Hey, thanks for joining me. We're going to look at dollar FX pairs in this video. It's October the 23rd, it's Sunday. Last week was a horrible week through most of the markets for me. I'm not good when markets do this. Down one day, up the next day, down one day, up the next day, down one day, up the next day. And then this massive bearish engulfing candle. You know, this isn't a trend or pattern that I can trade myself. If you're good at that, if you're good at identifying that, that's great. But, you know, I'm a trend follower. So I'm seeing a big red engulfing candle like this, and I'm thinking, okay, let me just zoom into this. You know, with the technical analysis knowledge that I have, and I've been doing this for a pretty long time. Yeah, I see this. So let's say we're here. Let's say we're seeing this. We've already got a big negative candle here, bearish engulfing candle at the peak for the dollar index. This is dollar index, by the way. I'm not sure if I told you that. Daily chart, dollar index. Now, then you see the market follow through to the downside with some pretty big red candles. That's not surprising. Then we test the trend line and we bounce. Again, not surprising because we're in a bull trend. We're looking to buy into support and we're seeing this as a correction in the bear trend. So you see this bearish engulfing candle again, and it's below the previous peak. So I'm thinking, okay, this is a sign that the dollar index is going to fall this week. We're getting a little bit overbought. Well, we were approaching the overbought territory anyway, but of course it wasn't happening. Then we get this big green candle, so that you're thinking, okay, this is confusing. Then you get a big red candle. So you say, okay, here we go. Now we're going to get a move to the downside. But all we do is trade back to this trend line that you see, this trend line that I've got here. That holds, and then we get a big green candle. This it doesn't work for me. You get this big negative signal, big positive signal, big negative signal, big positive signal, and I can't trade stuff like that. So when we get markets like that, I find it confusing. Now, what have we got? Another bearish engulfing candle. Now, do I think, okay, finally we are going to get a move to the downside in the dollar? The stochastics are pointing that we could go down. We hadn't hit a big resistance level. So that if we had, and I could say to you, okay, look at the weekly chart, the monthly chart. This is suggesting that, you know, we've rejected that very important resistance level and the market's now going to tumble. We haven't got that, but we have got some negative signals and the dollar may need to correct. So now, you know, the problem is we may get a situation where we then chop backwards and forwards. I mean, if tomorrow's an update, I'm going to be smashing my head against the wall because the bearish engulfing candle has counted for nothing, would have counted for nothing the last two times that it's been recorded here. So situations like that, when the daily chart trend is just confusing and non-existent, I go to the short-term charts and I look to see, if there's anything that I can, going all over the place here. If there's anything that makes any sense. Okay, so this is the hourly chart and it makes no sense whatsoever. You see the trend lines are valid. This trend line is definitely valid, but we didn't get back up to that one. Okay, there's just nothing. The moving averages are flatlining. The 4-hour chart is the only chart really that is starting to make any sense whatsoever. So that's the one I would focus on if you are looking at the dollar index. There we go. There is at least, we do have some moving averages that are making some sense and they are combining with trend lines. So, you know, we bounced just above the support level there, which is at around 111.60, 111.40. So that looks like the support level for the dollar index this week. But what I think will probably happen is I think we'll probably get further consolidation, especially as we lead into the uncertain times of the election. Maybe traders or funds are not interested in taking on too much risk in the dollar until we know the outcome of the election. So it's confusing. Look at some Forex pairs and see if we can make any sense of these. Aussie dollar, right, again, sideways action here. Look, you know, what can you do? We start to move down. We get this very bullish candle here. Long lower wick, little green body, hammer, whatever you want to call it, pin bar, I think some people call it. Looks pretty positive, but then we get this enormous red candle the following day. Completely obliterates that candle, makes you think, okay, that bullish candle has been completely negated. We're in a bear trend anyway. I don't want to be long this pair. You know, that's killed any bullish signal from that particular candle. Then we get a massive green candle, okay? New low the following morning, and then massive green candle, a close near the high of the day. Nothing follow through really the following day. We couldn't even break the high of the big red candle. Then we get another red candle, so we seem to be moving to the downside. And then we get this doji. So by Thursday, I was just so confused. I didn't know what the hell was going on. We weren't going anywhere. It was obvious we were moving sideways. This actually, if I can show you on the hourly chart, yeah, let's go to the hourly. So we had what is a triangle pattern. That was what I was focused on. This trend line here, this lower trend line. Anyway, and I thought, well, we're probably not going to break it now. We're probably going to head towards the apex of the triangle as we go towards the US election. But we have broken above it. And we've broken above, well, we closed just, I could argue, above the 500-hour moving average. So as long as we hold, well, you've got the levels on the sheet anyway, so I don't need to repeat them. I'm just kind of showing you my thinking behind it all. But you know what my support level for the Aussie dollar is anyway. Check the sheet. We have a little bit of resistance. You can see that from here. 64, 63.90, 64.00. So anyway, follow what I've said in the report. Please make sure you read it. So as long as we hold the support level in the Aussie dollar, the things are looking more positive for that. So that pair certainly indicates that the dollar could weaken this week, following the bearish engulfing candle on the dollar index chart. But remember that the Aussie dollar doesn't actually is not made up. It has no weighting in the dollar index, so that's not that relevant in that respect. The New Zealand dollar is trying to break higher, and I can argue, if I show you the hourly chart, actually I need to go back to the Aussie dollar chart and show you the same thing, but look, I can argue that this is an inverse head and shoulders pattern, just about. This could be a big left shoulder, the head, and the right shoulder. Now, if that is the case, then I've got a neckline here, and we've closed above the neckline. So that's positive for the New Zealand dollar, if indeed that is what I think it is. And I'm going to go back to the Aussie dollar and show you the same thing, which I forgot to show you. So can I argue? No, I can't actually. There's not a strong argument for that at all. It's really just this trend line of a triangle here that we've broken above, and we've beaten and hopefully closed above the 500-hour moving average. Okay, if that New Zealand dollar can hold above the support level that I put in the report, the neckline to the head and shoulders, inverse head and shoulders, and then we can see the New Zealand dollar climb against the US this week. Now, the euro is just in a horrible sideways trend recently. There is the weekly chart, clearly in a negative trend, but when we look at the daily chart, which I'll show you in a minute, I just want to show you the hourly chart first. This is the pattern that we've had for a month. You know, it's a long time, a month, 4 weeks anyway. You know, just going sideways. The range is narrowing in the triangle as we head toward the apex. Again, at the end of last week, I was like, I'd given up with trying to get a direction for the euro over the last month, and said that we may head into the apex of the triangle, which would be around the end of October, beginning of November, or the end of October, and then break out as we head towards the US election. Well, maybe we have the breakout already. We've just broken above what is a 3-week trend line and closed above it, and I wasn't sure that we would do that. So that gives me some of a more positive outlook for the start of this week for the euro versus the US dollar. I don't think we have. Do we have the bullish engulfing candle? Yeah, we do. We have a bullish engulfing candle. Not quite as dramatic as the bearish engulfing candle on the dollar index chart, but we have a bullish engulfing candle as well with a potential breakout above the trend line. So looks like we could, as long as we hold above sort of, well, you've got the support level on the sheet, but anyway, holding above the 98.5 area can take us up to this resistance level, which is around 99.20, 99.40. You know, I've got that on the sheets today. That's the reason you can see fib level, definitely price action backing up that area. And we've got a trend line going all the way back to February. So, you know, pretty long term. What am I doing? Trying to do that. So yeah, the trend line there as well. So that's going to be the key level for the week, 99.20, 99.40. Now we break above there and I can start talking about a more bullish trend, at least in the short term leading up to the election. Anyway, you've got the levels on the sheet. Same report, you've got the daily, you've got the US dollar versus the Canadian dollar. A bearish engulfing candle there. That's worth noting. We've got some of these lately. We had a bearish engulfing candle at the peak there. It's so choppy, isn't it? Look, if we look at this on an hourly chart, it's just untradable in my opinion. Untradeable. And well, unless you're a very good range trader, better than me, but you know, the parameters of the range are not even very clear. I guess I could do something along the lines of that. But you know, this isn't something that I'd be prepared to put any risk on with. Now, in the short term on the hourly chart, we've broken below the 500-hour moving average in this lower trend line. So that has indicated that we could probably head south, maybe, but look, nothing convincing enough for me to take a trade on the dollar Canadian at the moment. Versus the Canadian, which is on the same report, it was looking so clear, and then we broke up. But look, we've got the big resistance level remains 136.00, 136.10. In fact, it's almost 135.90, 136.10 at the moment with the 200-day moving average. So that is the level that bulls need to beat, and that will be the main resistance of the week. Any other level is just not really strong enough for me to get overly involved. 134.20, 134.00, you can see is some sort of a messy support level there. Okay, I think that's it for the dollar pairs. Is it? I've got to do cable. Cable, which has been obviously pushed and pulled by all the shenanigans with the UK government and the mini budget and everything else. We don't need to go through that. What can I make? What sense can I make of this? Okay, we broke lower to 106.60, 1.1060, I should say, and then we've rocketed. Now, as the dollar plunged late in the session, you can see that that's a decent enough trend line, and it's a good support level. I wasn't brave enough to put that in as a buying opportunity in my report. I just wasn't sure enough, and I should have done with hindsight, of course, because I've seen it bounce off there. Now, look, you can see the congestion here. We're going to have to get well through 113.00 for a more positive outlook, and we've still got support around 110.60. In between there, it's just a mess. Again, I really need to see some sort of breakout, something convincing in cable for me to want to put a trade on. Right now, I really wouldn't be doing anything. So not very helpful, but I'm just emphasizing the fact that sometimes you've got to sit on your hands and just wait for a proper signal and not get caught in this chop, which, you know, I really hate doing and unfortunately was unavoidable last week. Look at this. Big green candle, big red candle, big green candle, then two down days, wiping out the second big green candle, then you get a doji, then you think you've got some direction. You finally break below the 1, 2, 3, 4, 5 day low, but you hit the support level at the trend line and you tear up through it. So anyway, I hope those markets are something that you can trade. I personally can't. But let's see what developments we get at the beginning of this week and see if that dollar does continue to weaken after Friday's more negative signal. Analysis in the box below for those of you who are not subscribers, although you'll be reading this a day or two after I have released it to my subscribers. Okay, good luck. Questions in the comments box and I'll do my best to help you. Thanks very much. Please like, share and subscribe.